Bitcoin order book is primed for volatility, and we are heading into the weekend and the monthly close. We got a weekly close. We got a monthly close. We had horrible producer price index print this morning, and a couple other factors that are going to, in my opinion, ignite volatility here over the next few days. We're going to break that down here in just a few. So glad to have you with me. Hey guys, it's Keith Allen, and I do appreciate you joining me here on a Friday afternoon. I felt, I don't normally do these on Friday, but I was compelled to do so because of what the changing dynamics in the order book, and the fact that we have so many factors that I think are really going to influence price over the weekend. Now, I don't, if you've been trading crypto for a while, the weekends have gotten to be like, well, how should I say? Weekend whale games are amplified over, and it's things typically, or quite often, anyways, revert right back to where we were before the weekend started. So I don't usually do a lot of trading on the weekend. However, if you are in a position where you are either looking to, maybe find some exit liquidity and exit a position, or close a scalp, or maybe open a short, you definitely want to pay attention to what's happening this weekend. And the reason I say so is because, our typically our weekly closes and our monthly closes always give us some sort of volatility. I say always, not always, but usually give us some volatility. And through the day, really through this week, we've had pretty thin liquidity for a lot of the week here in the order book, and this morning especially just razor thin. And we're starting to see some of the liquidity dynamics change a little bit. So I want to share that with you, and I also want to talk about some of these other factors that might be influencing the price action here, not just through the weekend, but as we move into March. So let's start with the candle chart and talk about what's happening, all of the kind of thing. Actually, you know what? I'm gonna go straight to the all indexes chart and start here, because this is actually happening across global markets. So let's go ahead and climb in. By the way, if you haven't done so yet, do me a favor, smash the buttons. You know what to do by now. Hit the like, hit the share, help me grow the channel, and most importantly, hit the subscribe button so you never miss any of the future streams. Now, one more important element before I show you a chart. Live chat is open. These are always better for you and me when you guys participate. So I welcome you to join in the live chat here today. So let's go ahead and share a chart. We're going to start here on my grid of indexes here, which I have Bitcoin up top, and then we go into the S&P 500, the Dow Jones Industrial Average, and then the NASDAQ Composite down here at the bottom. All right. So as you can see, we've got red here. These are all on daily time frames. And, I posted something in my last live stream. I posted something about whether or not we might be seeing signs of a breakdown in TradFi as well. And it looks like, we had one day after the State of the Union address and the Jane Street news where everybody got excited and the market and all markets pumped, and everybody thought, hey, we're back. The Jane Street thing has really been what's suppressing Bitcoin. Well, maybe it has, but it hasn't been enough to now that that's been lifted, that hasn't really changed anything, and it certainly had no impact on what was happening with TradFi. So that narrative, flush it down the toilet. But as you can see, after a brief recovery on that, the one day after the State of the Union, we started to see things come back down. And of course, Bitcoin is below the 21-day moving average. We now see that the S&P is below the 20 and 50-day moving averages, and holding support for the moment at the 100-day. And we see that the Dow Jones has once again lost the 50-day. and the Nasdaq Composite is already lost the 20, the 50, and the 100, and now sits above the 200 day. And we've got death crosses forming on a couple of different charts here, including. Let's go ahead and see what we got here on the Nasdaq. I've been talking about the death cross that's forming on the Bitcoin weekly chart for a while, but what's happening here on the Nasdaq? I see that I had some. I opened the wrong chart. How about we undo that one and we go here and we try that again? There we go. So as you can see, this trajectory has changed a little bit, and I roughed these in. This has been kind of a cool exercise here. I've been roughing these in to try and get a sense of if and when these crosses might form, and things leveling out a little bit, but this isn't a foregone conclusion on the Nasdaq, because this could change, right? Monday could open up strong and pull out of this nosedive, but at the moment it looks like mid-March is on pace for a death cross between those two moving averages, and if and when that happens, I would expect to see price degrade further. Who have we here? Hey, Alex, good to have you. Alex, one of my old school regulars. Always good to have you with me, man. Appreciate you. Hope you are navigating through this nastiness well. So let's go back, and since we're talking death crosses, I can show you on the Bitcoin chart, because really we're going to break this into a Bitcoin analysis. So let's look at what's happening here. You see lots of stuff happening on the chart here. Let me first simplify and show you let's do this. Let me take out timescapes. I know it's a lot, but there's a lot going on. That's why there's so much. Here on the weekly time frame, you can see that we have a death cross about to form between the 21-week and the 100-week moving averages, and that could happen. Maybe it starts this week and then next week resolves deeper. We could see the cusp of it here this week. We could, after the weekly close, we're going to see these two. We're going to see these two touch at least, and then through the week it should extend, right? So there's that. And by now you should know what happens with death crosses. They are indeed lagging indicators, but if you look at history, they tend to, how should I say, be signals of an extension of that trend. And so obviously, since you're having a death cross, that's an indication that we're in a downtrend, which we of course are. And for whatever reason, like, I don't know, triggering algos and technicians who kind of look at these things the way that I do, it's an indication price is going to dump. And if you look back to 2022, I've referenced this quite a bit here over the last month or so. So many similarities between what has happened, what's happening now, and what happened back in 2022 when price lost we death crossed the 20 and 50 here. We death crossed the 20 and 50 here. We have a consolidation period. Right? We have that one wick and a consolidation period before the next leg down. The next leg down occurred after the death cross. And, well, do the math. Doesn't mean it has to happen this way, but this is damn near a mirror image. Let's add one more element to that. The weekly RSI, if you've listened to my analysis for any length of time, you know that I like this 41 level for the weekly RSI. It's really the dividing line between heaven and hell, if you will. It's the dividing line between bull markets and bear markets. And every time we dip below that 41 on the weekly, we are indeed in a downtrend, and a macro downtrend, I should add. But it is very rare to see things dip down below the oversold 30 level. And that's really only happened one other time. I guess we did dip down there briefly back in 2015. So not one other time, but still, well, that was 31. That wasn't even 30. So yeah, it did go to 27. So we had that happen in 2022. where we got pretty deep down there, 27 level, 25.7 for an extended period of time, mind you. This did not mark bottom. This marked bottom. This one back in 2022 did not mark bottom. What it gave us was another consolidation, an attempted rally rejected by the 200, and then another consolidation before we finally recovered. And so here we are in a similar set of circumstances. This is actually now RSI at 26. This may be the lowest the weekly RSI has ever been in the history of Bitcoin. And so it's continuing on this downtrend and likely going to extend a bit longer until we see a recovery. That's consistent with what we expect. Because if this is any indication, and again, it doesn't have to happen exactly this way, but we've been saying for a long time that bear markets don't end in a month or two or three. They tend to drag on for a while, and it would be having a recovery would be consistent with seeing this resolve, maybe at least finding a bottom by before the end of the year. Maybe Q3, maybe Q4, and then working our way back out. So needless to say, no expectations of a new all-time high in 2026 for me. Anyways, Alex, another month with Bitcoin on sale. Yeah, that's likely the case. And we'll be looking for new trend precognition signals to see if we get anything new on the monthly. That's always something I'm looking out for. We could conceivably see a signal here signaling a month out, signaling that maybe March doesn't go as low as February did. But we are on a pretty, I should say, pretty rough trajectory for bulls at this point. So we know that we have a 6-month candle. I mean, a 6-month signal that indicates that price not likely to go higher the first half of the year, and quite frankly, for the entire year. So there's room for rallies, but not likely an all-time high is what I'm getting at there. But we will, of course, be looking for new signals on the monthly and the weekly closes to see if we can recover from this. And so something else that we've seen historically has been rallies into March. And so I'll be watching for that as well. That may give me a little bit of an idea that we could see at least one candle. If you look back to 2022, it wasn't a big rally, but nonetheless, it was a rally that had some upside to it that could give you an opportunity to either close some scalps, exit some or de-risk some capital and save some dry powder, or potentially look for a short to open if we do get a nice pump. I really was expecting what we saw the other day to push a little bit higher. Now I want to clear out some of this stuff and we can focus a little bit more on just the specifics of the chart here. So let me clear these out. I should probably just make another version of this that's clean and not have all this business in here for you guys. But maybe I'll get around to that over the weekend. So let me just take these big circles out and we'll go from here. So there we go. So what I was expecting was a bit more than we got, right? I knew that the 21-day moving average was going to be resistance. I did take profit on a scalp there. I took a partial profit there. I expected things to go a little bit higher because price likes to overshoot these things, right? It's just the nature of the beast. And that did indeed happen. It did overshoot both the 21 and that 69K level, which I expected, but I did expect it to go a little bit higher for one key reason, and that is we have a timescape level up here around 71, like 71.3. And so I was looking for a target here. didn't hit. I moved my trailing stop loss up, and I closed this trade in profit. Um, so I was very happy with that. Um, if we do get a rally, some whether it happens for the weekly close, whether it happens for the monthly close, or it doesn't, or it happens sometime next month, I would be looking at these levels again. Obviously, here's strong resistance at the 21 day. There's strong resistance at the 2021 top. That's 69K. There's strong resistance here at this April timescape of 2024. And there's strong resistance at this April timescape of 2025, which has confluence with the 50-day moving average. And I could repeat that exercise all the way up to the yearly open, which is the one I really want to see broken, which is actually at 87.5. And we can see that timescape when I go back to the daily time frame. So yeah, right here is where that 100-week moving average has confluence. We're looking at the daily right now, but on the weekly, it's right up here around 87.5. So those are really my targets, and this is like it's going to take a whole lot of luck and probably some manipulation to get things up this high at this stage because things have been so bearish. Now, why so bearish? Why so nasty? Well, today I could speak to the fact that we had a horrible report this morning. PPI coming in hotter than expected, significantly hotter than expected across just about all metrics. And so that's not a good thing. We will, of course, next month see some new unemployment numbers that we'll be looking to. The market will be watching for that later next week. We also have two self-imposed deadlines that are on pace to be missed right now. One is the Clarity Act, and a lot of people said the Clarity Act. Hey, Trader King, good to have you here. Hey, bro, what's up? A lot of people thinking the Clarity Act is going to be like the catalyst, and it could be, right? For those who might not be familiar, the Clarity Act is really what solidifies the regulation, opens the doors for banks to come on strong and transact in crypto, to also build on crypto, to custody crypto, et cetera, to make crypto available for their customers. So that would certainly help usher in some new money, not just the same capital we've been seeing rotate around this market, but help bring in some new money by the trillions, I should say. Whether that actually makes its way through to spot versus over the counter is another discussion for another time, perhaps. But that could obviously bring in some serious money into the space that can help push price up. However, it's stalled, and the impasse is whether or not the impasse is really around stablecoin yields, right? And I have to love him or hate him. I got to thank Brian Armstrong, CEO of Coinbase, for sticking to his guns on that principle, right? He halted the deal before it got signed a month or so ago because of the fact that banks did not want crypto exchanges to be able to have yield on stable coins. Why wouldn't they want that? Because it's bad for their business, right? Because they're paying 0.1%, 0.3%, maybe 0.5% if you're lucky. But crypto exchanges, 2%, 4%. Okay, so that's a big competitive advantage for crypto exchanges. So what's going to be the workaround for that? I honestly don't know. I did see Coinbase, Brian Armstrong post something recently that said Coinbase is going to let you now choose if you want your yield to be in Bitcoin. So that might potentially be, and I'm wondering if that could potentially be the compromise, allowing users to earn yield on their stable coins, just not to earn them dollar for dollar in USD, in stable coins, so in USDC, but instead to earn those yields from USDC to a maybe a payout in Bitcoin or potentially ETH, or potentially let the user choose what asset they want to stack. That would make a great deal of sense to me, and I'd be okay with that. So that's just me kind of like, shooting it out there. That's a possibility. So let's go back to the charts here. Those are the upside targets. To the downside, obviously, we have a lot of concern of where things go, and timescapes come into play on the downside just as they do on the upside. Let's see if I still have this chart open. I do not. I have another chart that can actually, let's see if I, mm, see if I can find it really quick without killing a bunch of time. No, I don't want to waste a bunch of time looking for that. So I'll just show you what the levels are that I'm looking at in terms of where price could go. So I'll start by removing timescapes and showing you kind of some historical levels that I think are interesting. They're at least interesting to me. Starting with, of course, and this is one that everybody's waiting for, and probably why it was missed. The 200-week moving average, which currently sits around 58K. Um, this is it's almost too obvious of a target. And if we were, I don't know, if it was August, September, and we were hovering around this, then I might be more inclined to say, hey, that could be the bottom. But considering where we are right now and where we are on the calendar, I think there's a lot more time for price to depreciate before we find the actual bottom. And so there's that. Um, and if that does happen, like let's say, for example, if we stay hovered up above this level for months and months and months, and that may sound like a horrible possibility, or maybe even a small possibility, but if you recall, we spent 8 months here, 8 months, and broke it on election day. And so there's some structural strength here. That's why we're having such a hard time getting past this level in either direction, for that matter. But it's certainly why it's now very strong resistance. And the other thing is, so if we lose this, where do we go? And I look to the prior consolidation levels and double bottoms, of course. So I do like this 54 level, which was a double bottom. It may not look like one to you from here, but if I take it to the line chart, oh, excuse me, if I take it to the line chart, it's a beautiful, perfect double bottom right here. Okay. So this is an interesting level to me. And again, if we hit this in the next few weeks, I think we go lower. Um, and so this is a potential target for me. Um, and if you're dollar cost averaging, this is also another interesting target. Um, and then we go below that. Where do we go below that? Obviously 50 is psychological. We spent very little time consolidating around 50K, as you can see here. And then we had another consolidation range uh, to the low to mid 40s. And so I think this is a reasonable target as well. And again, if it breaks down from there, you go to the next range below that, 25 to 30 range. This to me is a very long shot. It's a the lowest probability in my opinion, at least at this point. Again, if we zip down here in the next 2 weeks, then I'm going to go, okay, well, maybe we do go down that low. But if we continue on this slower grind, then I think this is a long shot. This is a reasonable target. Anywhere in the 40s to 50s really could be the sweet spot. Um, Trader King is very excited about the 200-week moving average. Yes, it's juicy. Indeed, it is good. It would be a good place to DCA. It would be a good place to maybe a partial take profit on a short, potentially. And then you go from there, right? So let's see. It says SFP of the low, yes, and greed I expect to be the low. Well, guess what? fear and greed isn't always the low. We have been on a just an absolute fear and greed grind here for the past week. If I can take this to the expanded chart, you can see we have a cluster of time here where we've been absolute the lowest of lows for the fear and greed index. 5. I think it's the lowest it's ever been in history, right? Right around here as well. Um, but we've spent an extended amount of time here since like last week. Also, a rarity. It happened back in 22 as well. Sound familiar? Are you detecting a pattern between now and 2022? Yes, I certainly am. So keep that in mind. And this did not mark the bottom, mind you, right? So June 2022, let's look at that on the chart real quick. Let's go back to the candle chart because we love candles. And June 2022, here we are, right? We were in a local low, but it wasn't the bottom of the market. It wasn't the macro low. We were in oversold territory, similarly to how we are now, but it wasn't the macro low. So keep that in mind. Fear and greed doesn't necessarily mean the bottom. Oh, agreed. You expect to be October the low. Okay, so we're aligned on that. But you gave me something to talk about anyway. So thanks, Trader King. I appreciate that. Um, yeah, I think, and I'm admittedly not great at forecasting time. But I think Q3, Q3, Q4 is when we will mark a bottom and start to see some sort of recovery. So let's go back to that liquidity issue, right? So let me show you on fire charts what I've been talking about in terms of this thin liquidity. And if we zoom out a little bit, we'll gain some perspective. And you can see how when the order book is thin, we get more volatility. And so we now have some bids moving into this range. We can see that, but look how thin it is up here, right above where we are right now. And we even had a couple of roof pulls, I should say. Rug pulls happen below. Roof pull happens when it comes from the top. And so we saw some liquidity moving into place. And I'm going to push the volume percentiles here on fire charts so we can see this a little bit better. And you'll notice that the scaling is going to change when I do that. But what you can see here is we had roughly 20 million stacked at that 70K level, and half of it pulled. And so that makes a big difference. Okay. When that liquidity moved in, it helped suppress price, right? It came in and price came down. And now it has been lifted because it's, for those guys, it probably served its purpose. They probably put it there to push price down so they could get bids filled or close shorts or whatever, or possibly protect an options trade that closed today. And then you see another block came in here. This was another $20 million block that came in to suppress price, push price down to that 65K level, and it also roof pulled. So the door is open to at least run it back towards 69, 70K. It's pretty thin here, right? So, I mean, you can see 1.7 million, a million, less than a million, 400,000. There's nothing. This is nothing. So you're not going to see brown whales make an order up here, but they will often, as we saw them do earlier in the week, buy into blocks of liquidity so that they can break those walls and help break those walls. And so if we had a brown mega whale buying here with a couple $1,000,000, it would really help eat through this, and the other order classes would follow, most likely. So you see the liquidity dynamics. We're ripe for an upside rip. It's not terribly heavy up here to the downside either, right? I mean, look at this: 65K, 5 million, a million and a half, a million, 1.3 million, 2.2 million, 1.1 million. This is very, very thin, right? It takes nothing to get through this. So that's why we're in a precarious position. That's why I expect a lot of volatility. This, of course, plus we have the the monthly close tomorrow and the weekly close on Sunday. A green monthly close is off the table, but a weekly close is um, still in the cards. What would it take to get a green weekly close? Let's take a look at that weekly candle. Um, where did we close last week? Around 67.6. So that's easily attainable from here. And if you look in the order book, it's very easy, right? There's nothing here keeping us from that, except for this one little block of $6.8 million sitting in the Binance order book. Good question, Trader King. Is Fire Charts aggregated? No, Fire Charts is at the moment Binance only. It's the largest exchange, has the most volume, really serves as a pretty good proxy for everything that's happening in the market. At least it has for the last 6 years. So we will eventually be adding new. We've been working on an infrastructure upgrade. We're actually getting ready to do the full release of Fire Charts 2. We've been in beta for a long time. And so we are getting ready to move out. And now that we've made those infrastructure improvements, we're hopefully closer to being able to add more exchanges. So hope that answers that for you. Let's how's the liquidity on ETH? Good question. Let's see. But look at this on the daily view before I get there. Look at, I mean, nothing. Hundreds of thousands of dollars. Normally you see millions and millions and millions in here. It's hundreds of thousands of dollars. Very, very thin. And some buying off the bottom, but not a lot. I expect things to ramp up. Weekend whale games, obviously a pretty typical thing around here. I do expect to see some of this thin liquidity exploited. But once we get to that death cross I shared with you, I think things take a turn to the downside, and we will see the next leg down. That's my expectation from here. Don't follow me blindly. Do your own research. I'm not giving advice. I'm just telling you the way I see it and what I think is going to happen. ETH. Let's see. ETH. Similarly. Oh, just real quick before I get there, I just want to wrap up this thought. I also, into those targets in both directions, I had timescapes, and this is why I liked 46, because we have this consolidation in this 40 to 45 range, right? And we have a cluster of timescape levels around 46 to 48. And when you have a cluster like that, I think that strengthens the resistance or support, whatever it is at that point. And so we also historically, when we get to these bear markets, we tend to not, it tends to be higher macro lows. And so that's why 54 was interesting to me, because 54 would hold a higher macro low. But if we lose that, then this range up here still keeps us would keep us in a higher macro low from say getting down to that 25K range. So that's my summation on Bitcoin. ETH, similar set of circumstances, just could not handle the breakout, right? And ETH looked to be doing pretty good, man. A little more consolidation here was good. Holding this range was good. We saw this candle and everybody got excited, and then we got the rejection from this 2021 timescape level, and now we are below these 2023 timescape levels. The dates here aren't really important to me. The only, at least the most important ones are the ones for the current year. And so we'll be looking for new timescape levels and how to play those when we wrap up this quarter. So at the end of March, we'll be getting some new timescape levels that we'll be paying attention to. For now, it's the yearly open that I'm most in tune to. up here around 3K on ETH. So structurally, ETH is not in a good place either, right? And so where we go from here remains to be remains to be seen. We'll also be looking for new signals, new trend precognition signals on the monthly and weekly closes for ETH. But in terms of targets, I should have a trend line in here some way. Oh, I see what happened. ETH USD. Okay, so I do have some interest in maybe getting down to this trend line around currently sitting around 1600 would be interesting for me. Um, Possible DCA position if you're short, good place to maybe take some profits. Uh, and obviously, if you take a position here, you want to wait and see what's happening with buying and liquidity to make sure that's going to hold before you ape in. Don't catch the falling knife. Now let's take a look at ETH in the order book and see if we can draw any conclusions. ETH order book is a little bit tighter in terms of what we see in terms of liquidity, but we do have some good. Um, Looks like we have some decent liquidity to the downside that might hold us up here for the weekend. And again, similarly to Bitcoin, thin to the upside, at least to the 2K mark, and not very heavy up there either. I should add, this is only 5 million bucks, so the order books are thin, and this just means sentiment is not there right now, right? It's and a number of factors, right? All of this uncertainty. Sure, the Clarity Act. I don't know if I mentioned it, right? The Clarity Act has a March 1st deadline, self-imposed, right? It's a soft deadline that the administration imposed on Congress to try and on Senate to try and hurry things along, and that doesn't look like it's going to happen. They also imposed a March 1st deadline on negotiations with Iran, and doesn't look like that's happening well either. So, is Trump going to get aggressive with Iran on Monday? I don't know. Don't know. So a lot to think about. A lot of uncertainty has the market unrest, and then of course, what's happening with tech stocks and software stocks and AI stocks. I just read a headline that Trump is halting government contracts with Anthropic because they're going head to head. So there's a lot of uncertainty in the market, and that is creating some tension. It's quite frankly making this a risk off period, and it's why we're not seeing a lot of liquidity in the order books right now. Because in terms of crypto, these assets are going on sale, and the market seems to think that this sale is going to get bigger, and I think it is too. And so that's where we sit at the moment. I hope that gives you some insight as we head into the weekend. The weekly close and the monthly close all are bearing down on us very, very quickly. And my expectation is when we get to this death cross, this is going to be the mechanism that gives us that kind of triggers the next leg down. Yes, there could be a recovery. We could have something like a catalyst, whether whether we stand down in the Middle East, whether the Clarity Act gets signed, or the Epstein files get released. I mean, like there's so much shit flying around, and it's hard to trade on those narratives, which is why I look at the charts, because the charts are not going to mislead you. The narratives will come and go. The narratives will mislead you. The charts never lie. I'll leave you with a parting shot of the order book and order flow on ETH. You at least have most classes buying. Whales, however, are selling. And on the Bitcoin order book, you have a mix as well. Whales have not come back in strong here like they were a couple of days ago when we were pumping back up to the 70K range, right? So at the moment, buying is muted at best. They've bought back less than 20% of what they sold so far. So you have the smaller order classes. Retail is in here. There's also some TWAP bots in here from time to time, but this is largely looks like largely retail at the moment in these yellow and or orange and green order classes right now. So keep that in mind. I'll zoom out, give you a little bit of perspective here. Um, yeah, it'd be nice to get back up here to that 100K level, but I don't think that's happening anytime soon. For the moment, we have a fair amount of bid liquidity, holding price up at 60K. We're always mindful of potential rug pulls. This has been here for a little while, though, so we'll see what happens. And you do have a ladder of bids, not a big ladder, but you do have a little bit of a ladder that has come in here. It's actually a little bit stronger earlier. Let me see if I can see this a little bit better. Um, yeah, just a little bit. Not nothing to write home about. Not like hundreds of millions, but maybe like 10 million dispersed through this range. So that's what you're looking at. Alex, I always appreciate you, man. Appreciate the comments. Trader King, thanks for joining me. And for the rest of you, hope you have a fantastic weekend. You know, the option is yours. You can back away from the charts and probably not see a whole lot of huge change before at least until we get to Monday. But if you're looking to be opportunistic, this weekend might present some opportunities for you. So be mindful of that. Hope this info and insight has helped you guys. If you want want more info on any of the tools that I shared with you, you know where to find them. It would be at materialindicators.com. Links are in the description. If you haven't done so yet, do me a favor, hit those buttons one more time, smash them. And even though this was a live stream, it is recorded on YouTube. So feel free to share it with your buddies who trade or any communities that you're engaging with on the trading side. And if you're not in the Material Indicators Telegram community, you are missing out on a fantastic spot. Link to that is also in the description below. Have a great weekend, my friends.